To this now, lender Capitec Bank reported a 16% rise in a full-year profit, helped by strong performance during the second half as a growth in net transaction and commission income grew by 30%. The bank expects its loan losses in retail banking to shrink within its target range in 2025. SABC Markets presenter Nastassia Arendse spoke to the CEO Gerrie Fourie for more on this.
If you look at the year-on-year performance, we grew of 16%. But I think more importantly, if you look at the half year versus the half year, we've grown with 25%. Very strong growth from our transactional base, especially with our new value-added services, products and Connect and Capitec Pay, which came at 29%. And then a strong improvement in our payments. In payments, if you look at half year versus half year, down about 800 million. So yeah, I think overall a very strong performance.
I want to talk about that strong improvement in impairments. What have you seen over the period?
Yeah, I think, we all know the economy that was tough, inflation high, repo up with 4%. We saw what happened in the whole world with inflation and interest rates. And that had a major effect on South Africa, and that's where we've pulled back. I've shown this morning in my presentation, we've pulled back with about 31%, the market with about 10%. And I think overall we're quite pleased with the results that's coming through. I think the interesting question is, where's the economy going to go this year? Where's the elections going to go? Where's the Middle East going to go? I think that is the uncertainty worldwide of what's happening in the economy.
When we look at the credit side, I'm curious, given the data that you're getting from your different clients, what are you learning about client cash flow in an environment that we've described as, consumers being under pressure or going through the so-called high cost of living phenomenon?
Yeah, I think if you look at the one stat that we've shared is, if you look at insufficient funds, that is if a client has a debit order or he draws money at the ATM or he does any transaction and there's no funds in it, it was at a high of 10.7%, or so 10% of 10.7% of all transactions had insufficient funds, and that's dropped to about 8%, which clearly shows that there's a little bit of green shoots coming through. I think if the inflation can go down further, we've seen food inflation dropping from as high as 14% to 5.1%. And if general inflation could get to 4%, average salary increases is about 6.5%, then we should have a different situation by the end of the year. We've already seen load shedding in a much better space than last year. So I think there's green shoots in the economy.
When we look at the operating expenses, there's been an increase here. Take me through the drivers of that expense growth.
Yeah, if you grow new businesses like business banking, which we've rebranded, if you look at the insurance business that we're building up, then the whole value-added services, plus changing your whole IT platform, bringing in Amazon, bringing in Salesforce, Microsoft, etc., then you will see OPEX going up with 17%. Our average for the last 5 years were 14%, so we're quite happy with that figure. And I think it's shown in our cost-to-income ratio, which was at 39%. So very much in line. We're investing for the future. We believe there is a future, and we will continue doing it.
With a strong focus on tech spending and projects, how aggressive have you had to compete for IT talent?
There's always a shortage in IT talent, I think, in South Africa, but if I travel abroad, there's always, if you look at data and IT, there's a shortage worldwide. We've gone out and said, how do we actually develop our own people from within with different academies? And I think that's proven very successful. So there's a very strong focus of developing and growing our people from an IT perspective and a data perspective from internal.
When you look at the presentation that you delivered this morning, you talk about key strategic decisions for future growth. And there's a line item here where you talk about the short-term impact on profitability in order for the group to be geared for long-term growth. What is that short-term impact?
Well, if you look at business banking as an example, we've reduced prices for business banking to the same as retail. So, you know, in retail, we have got no differentiation between clients. So all clients pay exactly the same for a transaction. We've done it in the business banking space as well. It's because we don't see a difference between if a person does a payment in business banking and retail, there's no difference. We've made our cash withdrawals for SASwitch and for our own ATMs exactly the same. We are reducing prices on electronic transactions. That's now on the RPP rails. And then there's a big investment in insurance. We've got a 30% profit sharing with Sanlam, as we all know. That is stopping from the 1st of November. And we need to invest and make certain that we can take that over. So you've got a double cost this year of the 30% plus what we're investing. But long term, if I look at next year and the years ahead, we're positive that we can get to double-digit growth.
You've been conservative when it comes to the granting of credit. What would you need to see for you to actually start opening up the taps for certain pockets when it comes to lending?
We're already looking at certain taps. Like I said, we've cut with 30%, the market with 9%. But I'm not on a big drive to say opening up credit. There's too much uncertainty. We need to understand what's going to happen with the Middle East. We need to understand what's going to happen with the election. We definitely going to focus is on the business banking space, on the secured side. We've got a very small market share there. And how do you drive that side of the business very strongly? So that will be a big focus for us.